Hey everyone, and welcome back to another episode. So, in today's show, we're actually going to be looking at, are European stocks more attractive than US stocks right now? So, there has been a lot happening on the US markets from January the year started. Though, if you've been following this show for a period, you'd notice that since the first 2 days of January, the stock market actually did well, and then it went on a downward trend afterwards. So for about 2 weeks, and then about the week of the 15th, that Wednesday was when the market really picked up and turned around, and then the inauguration of Donald Trump happened on the 20th, and ever since that, the market has been doing really well. Well, the market has been doing much better than it was before, and to add to that, the market confidence has slowly been growing as well. So the last video that we did, we actually had highlighted that the CNN's Fear and Greed Index was actually at 38, and now it's actually up about 41, which means that it's getting much closer to that neutral state, which means that more and more persons are putting their funds into the stock market again. Up to the 21st, the actual stock market was actually underperforming compared to their European counterparts. But since the 21st, the first 2 days of the new president in office, has actually seen more favoritism, more likeliness into the actual stock market. And despite all of this, the market has actually still somewhat in that fearful state. So it went up to 41 and now it's back down to 38. And this really has to do with Donald Trump's policies. So one of the major policies that he actually has spoken about was that he's going to be implementing tariffs. And so his tariffs will be on pretty much any item that is not US made. So Mexico, Canada, China, Asia, Europe, all those countries and regions will actually be having tariffs placed on them. And so because of this, investors are a bit worried and they're a bit fearful as to what really is going to happen, because if doing business with the one of the largest trading partners in the world is going to mean that it's going to cost me more just to actually deliver goods and services to that region and that country, then it's really going to impact me, and it's going to allow for me to not want to do as much business with you. And so that will actually result in a reduction in business being done in the with the United States. And as such, the tariffs may increase the actual revenues of the country, but the amount of goods and services being produced and shipped to the United States will actually start declining due to the tariffs. And then if the United States has tariffs, then the rest of the world might respond by just adding their own tariffs to US imported goods as well too. And so that can result in a tariff war, which is what nobody really wants. So as a result, as we go back into the stock market now, so the actual S&P and Nasdaq indexes are both finally neck and neck in terms of return. So they're both at 3% growth rates year to date right now. And this is really great considering that the Nasdaq was actually only at 1.81% a few days ago, and the S&P was actually at 2.5 a couple days ago. And now that they're both up to 3% shows that the market is a little bit more confident as to what's happening. Now if you go and look towards the FTSE 100, you actually realize that that market actually has been increasing as well too. So the FTSE 100 actually is now at about 3.45% year to date, which really means that the London market is actually getting more populous, getting more attractive. And to think about it, the London Stock Exchange has actually been very conservative and underperforming over the past few years. So in 2016, London Stock Exchange was actually the number one largest European stock market. And then by 2018, Brexit happened, and Boris Johnson actually had delivered on his promise, saying that he was going to get Brexit done. And so when he came into office and he had promised Brexit and he delivered on this, that was really where the troubles and the worries started. So persons lost confidence in London because really and truly nobody knew what was happening. And so because of that, that would have resulted in money being shifted from London Stock Exchange to other exchanges across Europe. And at that time, 2018, 2019, when that huge shift occurred, the Amsterdam Stock Exchange actually became the largest stock exchange at that time, and that was due to trading volumes and popularity, market capitalization that actually occurred during 2019. And then somewhere along that line, the Paris Stock Exchange actually took over. So the new Euronext Paris actually became the largest stock exchange in Europe. And so that was actually the dominant stock exchange in Europe, seeing large activities and just funds, money moving in and out of different companies, different funds. And then by 2024, London really took over again. And then there was an article where the London Stock Exchange was at about $3.89 trillion, while Paris was at $3.13 trillion, showing that London had just edged out Paris by a few $1 billion. And so right now, the London Stock Exchange is back up to being the largest European stock exchange of the world. And it really has been a long wait and a long fight coming, because on top of Brexit happening, which would have caused all of the uncertainty and investors losing confidence and trust as to what exactly was happening in the country, there was the whole parliament fiasco that happened earlier in 2022-2023, when they had actually employed Liz Truss as the Prime Minister for London, and she only stayed in power for about 42 days, and it was so controversial. She actually made history being the shortest leader for any nation worldwide. And there even was articles out stating that lettuce lasted longer in the fridge than Liz Truss lasted in Parliament. And during Liz Truss' actual tenure, or that brief stint in power, it actually had resulted in huge devaluation in the British pound. The market uncertainty increased, interest rates went sky high, inflation went through the roof, and the devaluation of the dollar was so significant. And it really was until when she came out that the whole London kind of England started getting some sort of stability back in. And so they had changed their political party, and now the Labour Party is in power, and there's some sort of stability that's happening in there now. And so the whole London economy, the London movement, England on a whole, is being more popular towards investors right now. And especially with what was happening in the United States, with Joe Biden actually handing over to Donald Trump and the markets actually being down for that period of time, so from most of January the markets were actually down, then it was pretty clear that investors were shifting their funds from America to more international markets. And so as you look towards the banking index, and so the FTSE 350 bank index is actually up about 6.63%. So leading the FTSE 350 index is Lloyds Bank up about 11%, and then there's Barclays Bank in second place up about 9%, and then there's HSBC in third place up about 4.8%. And it is actually a bit surprising because HSBC is the largest of the three banks with a market cap of 145 billion pounds, and second place is Barclays up 42.92 billion pounds, while Lloyds Bank is in third place with a market cap of 37.29 billion pounds. And if you go across to the United States, you'd actually notice that the Dow Jones US Bank Index is up about 7% year to date now, and it was actually a little bit lower on the 21st of January. So it actually had climbed some more. And with that climb, there is Amex, Wells Fargo, Bank of America, Discover Finance, all up. So Bank of America is actually up about 3.39%. Wells Fargo is up about 10%. American Express 10%, and Discover Financial Services up 13%. So as you really can see, based on the data, the largest banks in America and across America, and the largest banks across Europe are pretty much neck and neck in terms of returns. America has just edged out London just a little bit, and this is as at the 22nd. The 21st, London was actually edging out America, and so it's quite interesting just to really see how much one day can really shift an investor's view and just stock price movements overall. So are European stocks better than the United States stocks? The answer for that question right now is actually no. But the suggestion is that based on what's happening right now, especially with London and with growth scheduled to actually happen for the year to come and future years to come, with Europe also expected to grow as well, with the interest rates coming down, inflation being managed, then adding European stocks into your portfolio is actually not a bad suggestion and not a bad thing to do. Now, I'm not saying to move your entire portfolio from US stocks into European stocks, or to move the bulk of your portfolio into European stocks, but to actually increase your exposure into the European market. So if you currently have 100% in United States stocks, then by shifting a few of your weightings from American to European is actually not so much of a bad idea, because you can capitalize on the growth that will happen and will occur. And yes, America is right now outperforming European markets, but the American market is actually going to be a little bit or a lot more volatile than the European markets. And it is expected, because if you want to get that much better return and that much better growth rates, then the volatility is actually going to be something that you have to actually be willing to take on. And so having European stocks in your portfolio actually gives you diversification against the US dollar and also against US policies that may or may not negatively affect trade and trading partners. And just in the event something should go unexpected or not according to plans and hopes and dreams, then you'd have actual exposure in other markets to prevent your portfolio in the event that something catastrophic should happen. So, I don't give financial advice but or recommendations, but my suggestion to you would be increase your portfolio weightings into European markets if you have not yet actually increased have any in the European markets. You can consider, you can start with the London Stock Exchange. That's a good exchange to start with, and then you can branch out from there into like the Amsterdam Stock Exchange, the Paris Stock Exchange, the Dutch Stock Exchange, the German Stock Exchange, which actually was doing really well. The DAX 40 actually had has an amazing year so far. And the returns on the DAX 40 index is actually up 6.14%, which is amazing. This is twice the amount on the Nasdaq and the S&P 500 and also the FTSE 100. So these returns are amazing and they are great. So if you want to get exposure into the European markets and you don't know where to start with index funds. And based on what we have been talking about for the year so far, and with banking stocks set to actually do well, you can actually get some stocks that track the banking indexes, or you can actually get outright banking stocks at one individual banking stock or two. And my suggestion would be start with either the largest company in that region that you want to purchase, or top three. Don't go for a small cap banking stock that you're hoping will actually take a big risk on and a big bet and they pay off, because usually the smaller companies actually carry larger risk. And a lot of times if you don't do your necessary and proper research, a lot of times you won't actually get the desired outcome. You have a much better chance with a larger market cap stock. And so that really is it for today. And so I just want to say happy investing, enjoy that wild crazy times, the wild ride out there in the stock markets right now. And thank you guys so much for tuning into this episode. I do hope that you enjoyed it. If you do, feel free to give us a thumbs up or a like wherever you consume this material. Share this video with a friend, as that is right now the way that we are seeking to grow, and we really want you to have that discussion with someone that you feel can benefit from it. Leave any comments that you might have down below, or get in touch with me if you're shy and don't want to actually reach out in the comments bar at mytcapital@gmail.com. And until next time, take care. Also, subscribe or follow so that you don't miss out on any new episodes as soon as they are launched. Until next time, take care. Love you guys. Bye.